First of all, the 25 basis point cut is a done deal. If you're trading the underlying cut, you're already late. The real game is in the forward guidance. What does Powell signal ahead? Now, I've shown you this little handy illustration already for the September FOMC. And well, that's still exactly the playbook. The logic hasn't changed a bit. It's still the most reliable map we have, especially for the precious metal. Here's what it was back in September when we posted about this exact same scenario. The story was exact same. More cuts or no more cuts. And in September, Powell gave his implicit but evident approval for more rate cuts ahead. And in fact, at this week's FOMC meeting, they'll cut by another 25 basis points. So let's bring that logic to today's chart. Don't overcomplicate this. Are more rate cuts on the table ahead? If yes, that's bullish for gold. Why? Because lower rates make holding a non-yielding asset like gold more attractive. There's many reasons behind it. But be careful, because if instead Powell says that they may not cut rates any further for now, then that's bearish for gold. That's all. Everything else is just chatter. It all comes down to one question, which is the core of what fundamental analysis is. The question is the current story likely to continue, or is it exhausted? If the Fed will keep cutting, the story and so the sentiment will continue. If the Fed will not cut rates any further, then the story and so the sentiment will start pulling back. Now you've got a playbook. But how do you get the inside scoop? Well, we listen to Powell's press conference. Specifically, we listen to his tone on the labor market and inflation. Let me show you what he said in September.
What's different now? What's different now is that you see a very different picture of the risks to the labor market. You've seen, we were looking at 150,000 jobs a month at the time of the last meeting, and now we see the revisions and we see the new numbers. And I don't want to put too much emphasis on payroll job creation, but it's just one of the things that suggests that the labor market is really cooling off. And that tells you that it's time to take that into account in our policy.
The whole presser was along those lines. Downside risk to the labor market, less upside risks to inflation. Now, if he uses that same language again, meaning if he sounds cautious, concerned, maybe even a little nervous about the labor market, that's our signal. That tells us that the Federal Reserve bias is still towards more easing. They will expect to cut rates further. And that would allow the precious metal to resume higher, medium term, towards 4,500. But beware, if Powell shuts the door on further cuts, then the whole trend will take a sharp turn. So once again, don't be deterred watching if the Federal Reserve cuts or doesn't cut by 25 basis points on Wednesday. That's old news already. Be deterred that looks for what's next, because that's what moves markets. That's what fundamental analysis is about. Now, that's it. If you like this kind of format of video, let me know with a comment and a like down below.